Welcome back to the channel, guys. Sean here, documenting my journey to financial freedom, hoping that this benefits y'all. And in the previous video, I talked a little bit about ETFs, doing a little bit of a reintroduction to those. In this video, I'm going to talk about index funds, focus on US indexes, the differences between the main ones, because you guys will hear about, S&P 500 and Nasdaq Composite, and what are those things? So we're going to get into, those indexes, how they came to be, and the differences between them, so that when you go and select ETFs that follow these indexes, you know what you're getting into. Now, if you want to invest and you're looking for a Canadian brokerage, I use Questrade. Wealthsimple is another Canadian brokerage that's pretty good. I have a link in the description if you guys want to get some free money to trade. I do get a small kickback that helps out the channel. So today we'll talk about the S&P 500, the Nasdaq Composite. We'll talk about the Dow Jones Industrial Average, the Dow Jones. You've probably heard about that. I'm also going to talk about one called CRSP, which is the total market at the end, and we're going to compare how all of these have performed, not just in the last year, but over the last couple decades, so that you guys understand how these ETFs and these indexes would function. But before we get into all of that, all right, so let's talk about the three main US indexes and their similarities and differences. Remember, now we're looking at these through the lens of an ETF. Remember, we talked about an index being kind of the leaderboard of companies or a group of companies. Same thing as ETFs are baskets of different investments in different companies. So if someone makes it onto the S&P 500, you will automatically get that company in your ETF that follows the S&P 500. Same thing, if they drop off, they'll come off your ETF as well. Now remember a couple things too. Read the fact sheet of your ETF before you invest, and know that most of these indexes kind of weight the top company more heavily as it is in the S&P 500, for example. As you go down the list, you'll find that the companies get weighted less and less as you go down. So you're not getting like one share of each company, you're actually getting it more heavily weighted towards the top performing companies with the biggest market cap. So all this information, you should just read the fact sheet just so you know what you're buying when you buy it. Now, if you're choosing an ETF that follows one of the indexes, which would you pick? The S&P 500, the Nasdaq, or the Dow Jones? Well, let's compare the three. All right, first up, let's talk about the S&P 500. It stands for the Standard & Poor's 500. It basically ranks the top 500 companies by market cap. And although it's not perfectly in order, it is considered to be the best indicator of what they call large cap companies, which are companies that are valued at the most money or worth the most. This index is often used as a benchmark for the US economy, and it's mentioned all the time in that book, Money Master the Game by Tony Robbins. I'll actually leave a link to that book in my description if you guys are interested in checking that one out. You may have heard about the S&P 500 because it was recently talked about when Tesla joined. I think it was late last year. Tesla joined the S&P 500, and it contains Apple and Google and Facebook, as well as Johnson & Johnson, and all of these probably well-known brands we're all aware of. So they're all there. You got like the top 500 companies. So if you get an ETF that follows the S&P 500, you're laughing. If the company does well, it's on there, it's making money, its stock is going up. If it doesn't, then it comes off the index and it's replaced by another company that is doing well. So if you're interested in this one, I've got a couple ticker symbols for you to check out. The Vanguard one is VOO, and it's IVV for iShares. Those two are both in US dollars, so you have to pay in US dollars to invest in those. If you want the Canadian hedged versions, they are VSP and XSP. I will get into what Canadian hedged is in the next video. I'll do it in more detail, but what you should know for now is that when it's Canadian hedged, it's traded on a Canadian stock exchange, so you can use Canadian dollars to buy into it. And it does the exact same thing, but kind of takes away the variability caused by the change in the US versus Canadian dollar. So that's S&P, top 500 companies, pretty straightforward. Let's jump into the Nasdaq, or the Nasdaq Composite. Nasdaq stands for the National Association of Securities, Dealers, and Automated Quotations. It was started in 1971, and it actually was designed to be an automatic or electronic exchange. The whole thing was that it didn't need a physical space like Wall Street does for the New York Stock Exchange. It was totally automated and didn't have a physical location. Now, when people refer to Nasdaq, they're probably referring to the Nasdaq Composite Index, and what that is 3,000 companies, both in the US and internationally. So I'll put up a list of some of the companies that are in there, and often you look at this index as being more technologically angled, like more tech companies are definitely in this index. You can just see from the names here. So inherently, the Nasdaq will be more volatile because of this slant in tech companies that are on there. But these aren't just large tech companies. Like, of course, you still have your Apples and your Facebooks and stuff, but there's also the smaller cap tech companies that are in there as well. Now, there isn't an ETF that follows all 3,000 companies of the Nasdaq, but there is one that follows the top 100, or the Nasdaq 100. If you're interested in this ETF, you look for ticker symbol QQQ, that is iShares, and then there's XQQ.to, which is the Canadian hedged version of that. So the third one that you probably have heard of is the Dow Jones, or the Dow Jones Industrial Average. This index is 30 large publicly owned US companies, 20 of which are industrial and consumer goods companies. So it does have that sort of slant on it as well. It was actually started in 1896 by a journalist and an editor at the Wall Street Journal. To be included in the Dow Jones is a little bit subjective, and really, like, the Wall Street Journal has to, add you to the list. What they're looking for are companies that will stick around for a long time and have that kind of stock staying power. This is contrary to the other exchanges, which essentially just need the company to have a stock value of over $1 for more than a year. Of course, there's other criteria to get them on, but I find the Dow Jones to be a little bit more subjective. The companies you'll see in this are companies like Boeing, Salesforce, Honeywell, 3M, and they still have Johnson & Johnson and Apple and those other companies as well. But it's a shorter list. It's kind of like like a country club of these companies. If you're looking for an ETF, there's one. Look for ticker symbol DIA, that is in US dollars. And the only Canadian hedged version I could find of this was a BMO ETF, and so Bank of Montreal, which is zdj-t. So you can look those two up. If you want the Canadian hedge version, you've got a BMO one there as well. Now, what if you're like, Sean, okay, these are great, but I don't really like how they kind of have an in-group and out-group of companies. What if I want to get the big picture, the full picture of the US economy and those companies? Well, there is actually a different ETF or a different index for that, and its initials are CRSP. It stands for the Center for Research in Security Practices, and it's an index that covers 4,000 US companies, and it's considered to be almost 100% of all the companies that are publicly traded in the US. So this includes your large cap companies and the smaller companies, and it's kind of a blend of the S&P and the Nasdaq, because 4,000 companies is a ton of companies. Now, here are the tickers for this one, which is VTI. That is a Vanguard version. That's the US dollar one. And you can look at VUS, which is the Canadian hedged version. I couldn't find much for iShares. There was one that was ITOT that seemed to use a blend of other indexes to make the same kind of thing happen. And I could only find that one in US dollars, but there are a couple of Vanguard options there too. So you probably noticed when you were looking at the names of companies that are in these indexes that they had a lot of the same companies. Like, they all had Apple, they all had Johnson & Johnson. So you're probably wondering, well, is there really a big difference? And yeah, they will be weighted differently because, the Dow Jones only has 30 companies. You're going to get a bigger piece of each one of those companies. The S&P 500 will feature a smaller piece, but with more companies. The Nasdaq 100 will be somewhere in the middle, but with more tech companies than anything else. So it kind of depends on how much risk you want to take on, or what you think will do well in the next few years, and that's probably what you want to invest most of your money in. But how do they do? What is their performance like? Well, I'm going to put up a chart right now that shows how the first three indexes have compared, at least in the last year. So you can see it's about 6.3% for the Dow Jones, 16% for the S&P, and 44% for Nasdaq, which shows you just how hot tech stocks are right now. Nasdaq is doing really well, hot damn. But don't just assume that this is always the case. If you go back to 2000, which isn't really that long ago, you go back to 2000 and where that dot-com bubble burst and the tech bubble, they always say burst, you see the Nasdaq was actually lower than the other indexes, and it also tanked in 2008. After 2008 though, it's been crazy. It's had a crazy run and tech has really been just like a giant. Now, of course, you're good with the other two indexes as well. They've done really well, but you can just see how one certain industry is really dominating right now. Finally, let's overlay the total market index on top of these three and let's see. You can see right here, it lands somewhere between the S&P 500 and the Nasdaq. And this isn't really a surprise, right? With tech so dominant in the last decade, yeah, you'll get a little bit of that with the S&P 500, but with an index with more weight of technology, it's going to do even better. So it's somewhere between the two. But if you look back at history though, when the Nasdaq was doing poorly, the total market index wasn't quite as bad. So it kind of smooths out those spikes and those valleys for you over time. So VTI did 22% in the last year, and going back in history, it has performed better than tech when tech was low, but higher than the S&P when tech was doing well. So like I said, it kind of smooths out that curve. So I hope this kind of explains the differences between all these US indexes, where they come from, and why they perform differently. You can see there's something for every kind of appetite of risk or risk tolerance. Now keep in mind that these are long plays. Like I dollar cost average into the S&P 500 every month, and I don't really check it or pay too much attention to it. It seems to just do well, and that's kind of what I want. I just want it as automated as I can. After doing this research, I may go in and try to mix it up with a little bit of Nasdaq or some of the other ETFs I may find as I do research for you guys. Keep it locked right here. If I do make updates to my portfolio, I'll come out with a video and show you guys exactly what ETFs that I own, and as I feature them on this channel, I will let you know if I do invest in them or not. But typically I do the research first and then think about it after. In the next video, I'm going to go over some specific questions you guys had asked. We'll talk about which accounts to put them in, RSP, Roth IRA, TFSA, whichever, and I'll even talk about covered call ETFs and what those are. So remember to hit that subscribe button, hit the like button if you liked the video and brought you some value, share it with your friends, tell people about the channel. That'll be great. Until next time, guys, have a great week. Spread the wealth. I'll see you in the next one. Bye.